video for Wednesday, July 24th. Well, we had a little bit of a mixed bag yesterday, but nonetheless still very, very quiet. Lack of movement in the markets. Dow Jones up 22, Nasdaq down 21, S&P down 3, and Russell down 1. So we're still basically consolidating at the upper end of the range, which is still a bullish signal, but you still have to look at it and say, okay, are we going to really attack the 1700 in the S&P? I mean, I think we're about 10 points away. There's no reason why we shouldn't. All of our analysis that we put together, and we've been talking about how the dollar down, the weaker dollar should prop up commodities and equities. And right now, it's following suit to what we've been talking about. So, I mean, if I'm going to play, a guessing game, I'm going to say, yeah, I think we get around 1700 first before we roll over. Now, that does not have to happen. It's just an idea or theory that I'm looking for in the coming days. So I want to get into the charts. Not a lot to talk about because we're still at these upper end of these ranges. Although, if you look at the future versus the ETF, you'll see a little bit more information. Where if you go into the Russell, and I'll get into that with the charts, but I just wanted to point that out. You'll see that the future itself is starting to roll a little bit over and breaking these longer term uptrend channels where the ETF itself is really kind of just hanging around there doing nothing. So that's going to be interesting in the coming days, and we'll see what happens. We're up right now about 3.5 in the futures, in the E-mini S&P and the overnight electronic session. So we'll just see if that's going to hold going into the session. Now, I would love to see a good run up this morning, get into that 1700, tag it or get close to it, and then have an intraday sell-off. And that would actually probably seal the fate that we'll get some sort of a pullback in the coming weeks thereafter. So we'll keep that in mind. I'd like to put different scenarios in place because then you're ready. Because when the one scenario does play out, you know exactly what to do. So it's just trying to be ready when the market tells you, which way this market's going to be headed. So right now we're kind of confused, right? The markets are just stagnant here, doing not much of anything, but consolidating. So consolidating is good, and it's basically unwinding its overbought readings and the indicators. Okay, so I want to just show you the tick. Quick move on the tick here. We're still at the upper end of the range. Tick's well above zero here, looking really constructive. No worries here. This is what you want to see. You want to see the tick always above zero and holding above zero. When the tick reading and a lot of the indicators get below zero and stay there, that's going to be a real bearish sign that the indicators and your market internals are now turning bearish. So just keep that in mind. Now, take a look at the S&P stocks above the 50. We didn't quite cross the 8 EMA as of yet, but we see we're starting to roll over here. Now, this is a tricky point because a lot of traders that say, "Oh, you know what? I got to roll over in a lot of my indicators. I'm gonna go and short the market." But what happens is that when it just touches it, usually you'll get boom, one more push higher. So that's why be patient. Don't just go in and look to, okay, you have a MACD or stochastics that are just starting to kiss each other. You don't want to just jump in and get short because that could just act as support and then give you one more push higher, and now you get stopped out where your intentions were right, but you were just too early. So just keep that in mind, okay? But we're still looking at this starting to roll over here. We're going to need a couple more days. And like I said, I think by the end of the week, we're going to really get a good handle on which way this market's going to go. I mean, do we take out 1700 and we roll higher? That's totally possible. Okay, bullish percent S&P. Same thing, as you can see, we're just now kind of rolling over here, but that was a real nice signal here, guys. Got a little choppiness, but as you can see, it does work most of the time. The bullish percent SPX does work, and it works really well. It's a good, reliable indicator. But we are, as you can see, getting overboard here in our RSI as well. So let's just keep watch on this. Just wanted to show you that. Now, I've been mentioning, the dollar, and right now, this is exactly what's happening. I said weak dollar this week should prop up equities. Now, equities hasn't gone anywhere, right? We haven't gone anywhere, but this is a good sign of where we're looking for. So now, my analysis is going to be totally based off what the dollar is doing. So if the dollar here can get into this area, right? They said 81.50, 81.75, even 82, believe it or not. If we can get a day or two of consolidation, okay, and then we get, or if we get today, if the market starts to pull back up and starts to produce a nice bullish candle, and we can build off that candle, then I would say we might have an interim market top. So that's what I'm going to be watching. But I wouldn't mind the dollar come in a little bit more, get into this 200-day moving average. So this is what we're looking at. So that being said, that's why we have gold being quite strong here. And we are getting into my short target watch area, okay? 1350, 1400 right there. 1410, 1416 is the 32% retracement, if you can see right up in here. Okay, this is an ideal spot to look to get short gold. I would love to see gold come in 2 days, run real hard up, and then really start looking at short gold. Now, this is a weekly chart, so you're not going to get two candles. This is building off the first week. But if we can get in here, maybe next week we could be looking for a short. I don't think it's going to happen this week, but let's keep an eye on it. But we're getting into this area. Now, we don't want to short while we're here, right? We want the market to reverse, and we want to take out the previous day's low, and that's going to be our trigger to start entering a short position in gold. Not there yet, but this is something that's getting a little better to be watching here, and a little getting ready to look into short this market here as far as the gold market's concerned. All right, so let's go into the charts. And as you can see here, guys, no movement at all. We're not really doing much of anything here. We're just sitting here at the upper end of the range. Again, bullish. We're in here into this uptrend channel, and we need really now to start breaking down if we are going to break down. So nothing much to tell you here. As you can see, there's no movement in any of the markets. Diamonds, sideways consolidation. Again, bullish. But we need to see now either we're going to break higher or we're going to roll over and start testing some of these lows here. Okay, really not much to talk about. Transports. Now the transportation sector, as far as the future itself, actually started rolling over a little bit. So it actually broke down from this channel. Let me show you in the future. If you can look at it, if you guys can get futures data, it is actually breaking below here. So that's interesting developments, and that's something that you really need to watch yourself for. Because when I look at the futures intraday, and it was quite weak yesterday. So that's interesting to see that the leader is starting to roll over. Also, same thing with the Russell. If you look at the Russell future, you'll see that this is actually breaking down from the channel where the ETF really didn't do too much. And Goldman Sachs doing well here now. A big breakout in the S&P. You're going to have a big push out higher in the bank sector here as far as Goldman's concerned. But right now we're really getting into this area. Let's see if we can really break out here, and then a back test, and then I think Goldman really starts chugging along much higher. Take a look at the ETF. Same thing as you can see here. All cylinders are chugging along. They're all firing on all cylinders here, so this is pretty good. And then we have Apple. Well, Apple reported last night earnings, and they reported. I think they had some of the numbers were weak, but overall, you know, the market liked what they reported. So Apple was trading around 437 or something like that. So we're right here in this area, the 433, 435-ish. Now 440 is right up in here. So we're going to be trading there first thing this morning. I think it closed at 437-ish, somewhere around there. Now it's really not a great big move here, but it's something to build on. If Apple can hold maybe another day or two and hold its gains from the earnings report, then you might have a good shot to get up here. But right now, that doesn't tell me anything. That Apple's up only about 16 points from the low of I think it was like 419 or something like that. But so this is something that's kind of confusing and we're going to need to watch. Apple could easily just roll right back over again. So this is something that we're going to be watching, the 418 area or the 440. So that's going to be the spot. Got about 22 points of cushion in between. 440, 418 is what we're going to be looking for. And also lastly is the Qs. As you can see here, tech is kind of weak here, and that's something that you do not want to see if you're a bull. All right, guys. Hopefully we get a breakout in this market. I mean, some doldrums trading is here, no question about it. But let's just see what happens in the next coming days. And again, patience, patience, patience in this market. If you don't see anything, no reason to get caught on the wrong side of the trade. Take a step back, let it come to you, make it look really easy when you're doing a trade. When the markets are moving and you have volatility and you have volume, it's real easy to make back any of the losses. But when you really have nothing moving and you're getting into a trade and all of a sudden you get stuck, it's very difficult to make that money back in the same day. let alone the same morning session, because of the fact that nothing is moving. So, just a little word of caution, that's all, okay? Have a great day, and we will speak to you tomorrow. Take care.